Okay, let's get started. Happy Taco Tuesday. Oh, man. I love wearing golfing polos, except I'm not on the golf course today because for obvious reasons. One, it is raining like crazy. Two, the stock market is blasting away. And three, well, my nose is kind of really stuffed for some reason. I had terrible allergies right now. Oh, boy. Please bear with me because my honker is definitely not working well at all. Okay, so we're going to be talking about quite a lot of things in this video. If you've been following me over the last couple videos now, we did also pick up a brand new subscriber as well, too. Slowly gaining new subscribers on the way to 100 here. Yes, going to be growing this YouTube channel, honestly, for the long haul now. At first, I really wasn't sure where this YouTube channel might be going, and I just love talking about stocks. I have a lot of, just about all my friends. I'm 37 years old. The vast majority of my friends are either a couple years younger than me, couple years older than me. So pretty much like the millennial generation. I do have quite a few friends in the Gen Z category as well. But I was showing them a lot of my videos, and I'm like, hey, just, watch them, see if it makes sense of what I'm saying. You buy the fear. If you're a long-term investor, it is great buying opportunities. If you are a short-term investor, you sell the damn rip. You buy the fear, you buy the blood, you sell the rip. It's pretty easy peasy, Japanesey to understand. And today we're seeing a very much nice green Tuesday. Honestly, we should have seen this yesterday. But before we get into that, yeah, so we're going to be talking about pretty much some updates today about where this market is going to be potentially heading. It is 10:33 a.m. Eastern Standard Time right now. Market's been over for about officially open for about an hour. I tend to like to make videos after the first hour goes by of market open, or I like making videos an hour prior of the market opening, especially if I need to cover or talk about some type of economical data. I'm also going to be talking about some data that's going to be coming out tomorrow as well, and going over the public profile here, public profile challenge, taking roughly around 34 grand, gonna try to take this. Actually, no, I don't like the word try. It's gonna go to six figures in the course of 12 to 18 months. Very confident. I'm not doing anything crazy with this profile here. It's great companies. Not to mention I got quite a bit of capital left. So as soon as we get a little bit more clarity and a little bit of the fears out of the way, although my gut is kind of really telling me to get in right now because there is fear, but when it comes to options, it's a little different per se. However, the options that I'm personally going to be doing on this profile is going to be long-term options, aka leaps. So it's a little more safer than rather short-term type momentum plays. Maybe might do one or two in the future here just for kind of fun. But that type of stuff you need to be doing on a very low amount of capital to really not gamble. Because this is not a gambling account. This is not a gambling channel. I am not a gambler. I am a very well-rounded, educated investor and also swing trader or just trader in general. And I really do believe in that ideology. So, once again, always do your due diligence of everything that I say in this video. I'm not a financial advisor. I'm just someone that's been in the market for quite a bit of time, and I know how to play the game. You buy the fear, and whatever your trading strategy is after that, you run with it. If you're a short-term trader, like I said, you sell the rip. If you're not, well, then you got great buying opportunities. Okay, so what is happening today? Well, as we see straight off the bat, Bitcoin. Woohoo! All right, so to sum up yesterday's video, Japanese carry trade. Japan is going to be in a rate hiking cycle. It's pretty ironic. America is going to be in a rate cutting cycle. A lot of hedge fund managers ended up taking out massive amounts of loans from Japan for low interest rates, especially during 2022, 23, early 24, because interest rates were very high in America. Last year, we had the government of Japan saying, hey, we need to start raising interest rates to battle inflation. Well, it caused a massive sell-off in the U.S. Stock market for one day. I believe it was August timeframe. Pretty much like amazing buying opportunities. I was buying SoFi in the $6 range. It's remarkable. Utterly just crazy. So yesterday there were some fears around that again. Fear, aka fear. We just had the best buying year in the economy ever. AI spending was up 800%. Consumer spending year over year was massively up. The consumers are still spending money. Now, a lot of arguments out there saying, hey, the consumer is going to spend money up until they lose their job. And then you have other people that argue that we're such in a easy-driven economy now where you can buy stuff from literally your phone with a click of a button here. So if I can buy stuff from my phone for a click of a button, maybe hypothetically I don't even have a job. Like, the consumer is still going to spend money. So we hypothetically, if we go into a labor recession, we could very well see consumers, even not with jobs, still spend money because of the accessibility of doing shopping. This is something very new, and this is where a lot of people have to kind of really step back and understand that no two recessions are ever the same. You got to think outside of the box, and I am definitely one of those people, and I look at everything. So, year over year, record growth. The economy is pumping away. Is the labor market data slowly getting worse? It is. Is it time for the Federal Reserve to start cutting interest rates? It is. Massively. Is it time for them to stop doing monetary tightening where they're not printing any more money? Yeah, let's get back to the money printer, which is just a scam, but our economy is going to go on an epic bull run. Is it possible that we go into a soft landing from 2022? Is it possible that we are in a rolling recession in 2026? We come out? To be honest, I'm kind of really leaning towards that we have been in a rolling recession. I don't really think she's the best trader, in my opinion. I've actually taken up some of her trades, but Kathy Wood, over at ARK Investing, she has stated multiple times that we are in a rolling recession. She has made a tremendous amount of money from buying into Tesla very early. She is very, like, I don't really understand her trades per se, but then again, she manages a lot of money for other people. I've seen her sell SoFi and then get back into SoFi. So, I mean, she's probably just taking profits, in my opinion, kind of like how I was doing the same thing on Palantir. I was buying Palantir in the teens, and then I sold in the 20s, got back in the 30s, sold in the 60s, got back in the 80s, sold in over 150. So, I mean, trading is trading. But, hey, you know, as long as you're profitable, you're profitable. She has stated so many times we are in a rolling recession. That would be extremely bullish because that means we're not going to have a downward spiral in 2026. Things can look like that. So, what is my prediction on Bitcoin? Well, the stock market, in my opinion, should be done throwing a little hissy fit. Whenever we get great data, the stock market, water cheers, the stock market always throws a little hissy fit because the stock market wants bad data. Bad data gives more pressure on the Fed to cut interest rates, but the market also doesn't want fall off a cliff data as well. And we've seen this many, many times. We get really bad data. The market nosedives. We don't want that. We get somewhat bad data. The market rallies. We get phenomenal data, the market sells off. It's the most inverse annoying bullshit on the planet. It really needs to get back how it used to be. We get great data, the stock market goes to all-time highs. We get great data, bullish, baby. Just like, come on now. It is time for this stock market to get back to how it used to be. So Bitcoin can still V-shape, or it's not going to be like, well, it's going to be a moderate, it's going to be a modified V-shaped recovery all the way back to 100K. When could this potentially happening? Honestly, as long, because a lot of people kind of really forget that Bitcoin is a hedge on the NASDAQ. So if the NASDAQ is doing very well, in theory, Bitcoin is going to do very well too. If the NASDAQ is busting through all-time highs, we are going to see Bitcoin hopefully follow in suit. We almost got SPY at all-time. I mean, SPY pretty much V-shaped recovery, like textbook definition of a V-shaped recovery over here. The Qs, very, very nice. The IWM, very, very nice. The NASDAQ, we're just waiting really on you to get a little higher, but we could very well see Bitcoin kind of really trend to the 100K. Now, if that does happen, that obviously means all these companies are just going to go back up to all-time highs. And for my profile here, so why does this do this? This just irritates the shit out of me. You know, I should have done a public profile challenge on Robinhood, because this just drives me utterly just bananas here. Okay, here we go. Obviously, we are here. Okay, so I did buy another, where are you? Something is not right. Oh, yeah, here we go. Adobe. It was selected. It was a different color. Oh, man. Yeah, I think if I ever do another public profile challenge again, I'm doing it on Robinhood. Webull is great for day trading, but it looks very yucky. So I did buy another Adobe share this morning. I'm really liking getting in on Adobe. I covered Adobe yesterday in a video of mine, and Adobe is so much fear around it, but yet we have seen 800% year over year AI spending. I'm actually in a MBA program right now, getting my master's in marketing business, and I just finished a semester, and ironically, last night was my last class up until January, restarting again, and it's pretty humorous. It's a non-business course that I was actually in, that actually had a very AI guest speaker. But the guest speaker was talking about AI within the workspace and also leadership as well. So it kind of really tied in. But anyways, the guest speaker opened up saying, hey, show of hands, how many people believe that we are in an AI bubble? The classroom that I was in had roughly around maybe 30 people. I, along with 3 other people, did not raise our hands. And I actually got called on by the guest speaker saying, hey, how come you didn't raise your hand? And I said, because everyone has their hand up. When it comes to monetary and like anything in the stock market, if everyone is saying one thing, the opposite, like, nearly always happens. If everyone is bullish, the stock market's going to crash. If everyone is bearish, the stock market's going to rally to all-time highs, probably go past all-time highs. If the stock market is a little bit of both, that is the best time to be invested. If everyone thinks we are in a massive AI bubble and the AI bubble is going to burst, that means the bubble is nowhere even close. Are we in an AI bubble? Yes, but we are in the foundation. It's going to be like probably maybe a decade before this AI bubble bursts. I really believe that we are in the early 90s of like an AI bubble. So we have a long ways to go. before this potential AI bubble like pops. Adobe, they are spending heavily on AI software. They are undervalued. I did a video on them yesterday of why I opened a position. I really see myself kind of really adding Adobe shares because I do got some capital on this account, $4,100 left to really deploy. And to be honest, I really did not buy too. I mean, in the last couple weeks, I ended up buying $30,000 worth of stock, hard cash. I'm not a millionaire. I'm not some big wig. I'm a small fish in a big pond, retail investor. $30,000, that's a lot. But I was also very underinvested in the market because I was buying stock to deplete my cash supply on Liberation Day low. I ended up selling way too early back in the end of June, July. So I've been sitting on some capital for the last several months, and it feels good to kind of get back into the market. And I know a lot of people did too. Maybe that's the reason why the SPY and the indexes only went down by 5% for a mini correction. Because there's so much capital on the sideline, maybe so many people bought on in. Possibility. Okay, but Adobe, I can see myself increasing this position to maybe 12 to maybe 15%. Yes, the more and more that I look at this company, I like what, and if their earnings are coming up next week, their earnings is going to be here. If they sell off after their earnings, I'm buying more shares. If they rally a little bit, in my opinion, it's still a buy. Now, if they do something crazy where they shoot up like sometimes they do by 20, 30%, I may or may not sell either half or all of my position. Why? Talked about this yesterday. Because there are other great opportunities. I can see myself in probably a good year doubling up on my position of Adobe, going to 100% profitability. But in the course of 3 to 5 years, there's a stock in this profile that I'm extremely bullish on. Yes, I love SoFi. I'm a SoFi bull, but SoFi is not the only one here. What stock has I been ranting and raving about? AMD. They can very well see a 4 to 5x return in the next 3-5 years. So therefore, by taking my $1,000 of profits from Adobe, maybe even a little bit more, I will be buying AMD. So, skipping over Honest and Meta really quick, going to AMD. I have a pretty decent sized position here of AMD. I'm holding AMD in my private profile, a massive position as well, just like SoFi. I feel confident if AMD goes below $200, it's a steal of a deal. They go down by 10% again. It is a steal of a deal. But right now, I'm very happy with the position size I have of AMD. And at first, I wasn't actually going to really be going for a large position in AMD. Then I thought about it, and I'm like, no, AMD has like the most opportunity here. SoFi, I'm only going to add SoFi shares if they go below $25. And honestly, we may not see those levels anymore. Yeah, stuff is really looking great for them. Okay, so Meta, end of next year, like I've been saying, $8,000 to $1,000. Robinhood is recovering very nicely here. I was not that aggressive buying Robinhood, and I really should have been. Same with Palantir. But Robinhood and Palantir on this profile, it's not going to be a long-term like hold. If the growth rates on Palantir starts to skim off a little bit, and if there's problems in the stock, I'm going to have to kind of really slowly shed out and take profits. But I mean, right now, it's hell. In a matter of 2 weeks, I'm up by almost 10% on Palantir. I'm up by 16% on Robinhood. AMD, 8%. I'd rather have a slow recovery on AMD. Meta is slowly increasing. Meta is always pretty slow and nice. Honest is really a risk-on type play here. And then Adobe 1%. I honestly don't really see Adobe making any type of really big moves until after their earnings. And I guarantee you, AI spending overall in the market is going to be impactful. I just bought a new laptop for Black Friday, Cyber Monday. I use Adobe products all the time, so I'm really, really bullish. Okay, so here's the public profile, and if you follow any of these stocks, definitely let me know. Very few of you all, in my handful of subscribers that are actually watching these videos. We will gain more. Don't worry. We will be growing as a mosh pit of community here. But for those of you that do like these videos and also do leave comments occasionally, thank you so much. But tell me if you do have some time to comment, what stocks you follow that I am covering and I'm also holding of my, oh wow, it's kind of really humorous. I got 7 stocks here. My lucky 7, I guess. Yeah, I do have 7 stocks. Holy crap. 1, 2, 3, 4, 5, 6, 7. Yeah, lucky 7. Let me know if you like any of these stocks out of the lucky 7 the most, and you kind of really want me to cover them the most. But, as for, like I said, the market, we got some economical data coming up, but it's really primarily just, I'm losing my crap over here. I had this pulled open, but I guess it did not save. So I gotta redo this. Hold on here. Hold on. Here we go. Okay. For some reason, I thought this tab was already open, but I guess it wasn't. Okay, economical data. Economical data 101. So tomorrow, we do have, for December 3rd, we have some data coming out, which is, it can definitely sway the market. ADP employment, that can really set up some stuff for the Federal Reserve and going on their meeting. But the big worries, honestly, initial jobless claims, that's in PCE. I mean, PCE is definitely trending in the right direction. That the Federal Reserve is happy. You know, it's so comical because the U.S. market is so looking at this data, and then once we have the data, we move on to another fucking fear. It's like we go from one fear to another fear. So now we are fearful in the market about what Powell is going to say at the rate cut next week. Is Powell going to say, hey, we're done cutting rates up until June? Because at that point, President Trump is going to say, okay, F you. Once you leave, I am going to put in this person. And then the person he's going to put in is going to say, yep, we are going in a rate cut cycle. So then that's going to set up the market for a very optimistic 2026. Because if Donald Trump is putting in a person that says, when I get in to the Federal Reserve in June, we are going to drop rates by 1 whole basis point. None of this 25% rate cut nonsense. We are going 1 full point. That is going to move the market tremendously. That's going to price in a 1 point interest rate cut. We could have a Santa Claus rally. Yeah, we could still have a Santa Claus rally. And that could be awesome. The only thing that kind of really bothers me in a way about that is what happens in 2026 with the labor market. We have a lot of money supposedly funneling into America over the next couple years. We may have to endure some short-term pain. Who knows? But moving forward, we're honestly just waiting on the Federal Reserve. And all these reports, I mean tomorrow ADP could very well like really sway the markets. But right now, it is looking like we are going to be getting a rate cut in December. So that is a win-win chicken dinner once again. Very, very good. Very, very happy, positive, bullish for the markets. We just got to be a little patient. And I've definitely rambled on in this video once again. So I'm going to leave you on this closing note that everything looks really good here. Probably going to be talking more and more about SoFi this week because December 5th, this Friday, S&P 500 inclusion day. If SoFi can get into the S&P 500 with a rate cut next week, oh my gosh. Woohoo! SoFi. Oh, I love you. 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 Oh, it's going to be good. All right. Thank you all for watching. Hopefully this Tuesday update in the market was good. Let me know down below in the comment section, and later.